All right, we're gonna take a walk and we're gonna talk about crypto, and we have some great news for you.
We're going to do this video while we're on a hike. I think some of you will enjoy it. I think the landscape will be more interesting than me just sitting in front of a camera in a room. So let's actually just enjoy the woods. Hopefully we don't run into any evil monsters, and let's talk crypto. So let's start with the fact that Huobi Chain was drained of $87 million. Yes, another crypto hack. How is this possible? Well, obviously it's just not very secure. So it's Huobi's Hecko chain. So Huobi has their own chain if you didn't know it. It's called Hecko. It's being drained of $87 million in crypto assets. The HTX exchange has been hit by a security breach. And it's very similar to the Poloniex hack. And what do Huobi and Poloniex have in common? Bam! They are both run by the mighty Justin Sun. You guessed it. So a hack very like the one that hit Justin Sun's other exchange, hit Huobi. Maybe they're sharing code, or maybe, just maybe, Justin Sun, his excellency, is behind all of it. Maybe he wants to be his excellency in jail. The bridge connecting the HTX exchange, formerly Huobi, and Ethereum was exploited for approximately $87 million. $87 million, honestly, is not that big. In terms of crypto exchange hacks, we've seen ones of like hundreds of millions or possibly even, I don't think we've seen billion-dollar hacks yet, but I think the biggest one was like 600 million. Large quantities of Ether, Tether, and wrapped Bitcoin, which is HBTC, were seen leaving the bridge for previously unused Ethereum wallet. So definitely hack, maybe insider job. And they were first picked up by CertiK, PeckShield, and Cybers, which are like blockchain analytics firms tracking certain movements. And the bridge's private key was likely compromised. How is that even possible? Who would know what the private key is? Maybe an employee, or maybe possibly His Excellency himself. We don't really know, and I don't know if we're ever really going to find out, but whenever I see a private key being hacked, I definitely kind of tend to think it's an inside job, because like someone has to give you the pass key, and there's really no way to get the pass key without someone knowing it first. So I think it's kind of like an inside job. The suspicious transactions were initiated by the Huobi Hecko Bridge Operator wallet, indicating that this wallet was compromised. Various other ERC20 tokens were drained, and they were swapped for Ethereum and distributed to at least 8 other wallets, probably been distributed to more now. 2 hot wallets of HTX Global, formerly Huobi, lost funds. So, Justin Sun, for his part, to make it seem like he's not part of the hack, which he may not be, it just might be like another insider, he actually has said he will fully compensate for HTX's hot wallet losses. So it really wouldn't make sense for Justin Sun to be behind the attack when he's going to fully compensate everyone for the attack, because that would mean like he's actually losing money, which doesn't really make any sense. So it could be someone else inside the company that's actually doing this. Justin Sun assumed control over the Huobi Eco chain in October 2022. But he denies he owns a majority stake. He is one of the CEOs that the DOJ has not pwned yet, but I think they're working very, very hard to pwn him as well. The primary purpose of the Hecko Bridge is to enable the movement of digital assets between the Huobi Eco chain and Ethereum. So it's basically kind of like an EVM type of bridge almost. It's not an isolated incident, but rather part of a pattern of security lapses in blockchain projects associated with Justin Sun. So yes, Justin Sun projects have security lapse issues. Remember that next time before you invest in a Justin Sun project, because you may not want your money stolen. Like we said, Poloniex recently had a hack, and now Huobi has to have a hack. Poloniex officials have been in the process of negotiating with a hacker in that case, and they might just be negotiating with the same exact hacker in this case soon. In other news, Blackrock, Grayscale have met with the SEC to discuss the ETF. We actually discussed Grayscale yesterday. They did just file an extra amendment to have the ETF be accepted, and Blackrock, the cabal, has actually met with the SEC today as well. Representatives from the US SEC also met with Grayscale on November 20th, but they met with BlackRock today. They met with the SEC to discuss proposed rule allowing the listing of a spot Bitcoin exchange traded fund or ETF. And I think since BlackRock's proposing it, it's a very, very good chance that the proposed rule actually does get accepted, because they are BlackRock, According to a November 20th SEC memo, BlackRock provided a presentation detailing how the firm could use an in-kind or in-cash redemption model for its iShares. They've been talking about in-kind versus in-cash, and I think they want both to actually be accepted. It's unclear how SEC officials responded to the two proposed models, or if they intend to approve a spot Bitcoin ETF after numerous delays and rejections. So like James Seifert has been saying, looks like BlackRock also met with the SEC. There's a couple of slides in relation to its in-kind versus cash creation. Based on this, it looks like BlackRock prefers in-kind for their Bitcoin ETF. So not all cash. You would trade other assets in the same amount or same proportional to the ETF value you're actually getting. So many reports have suggested the SEC could be nearing a decision on a spot ETF for listing in the U.S. markets. Obviously, Hester Pierce has interjected her opinion, and she says it does not make any sense for the U.S. to stand in the way anymore, and I completely and utterly agree with Hester Pierce. If approved, it could be one of the most significant positive trends towards mainstream crypto adoption. SEC officials also met with Grayscale. So they're one of 10 firms that are trying to get an ETF through, and I think like they have one of the highest chances. But if they get it through, all the other firms are going to actually get it through as well. So the fact that they've actually met with BlackRock and Grayscale on the same thing, I do think it means they are getting much, much closer to that point. And I'm very, very happy they are getting very close to that point because we've been missing a Bitcoin ETF for a long time. I think it's high time we finally got one, and I think the SEC is finally ready to throw in the towel on not allowing a Bitcoin spot ETF. For whatever reason, they haven't been allowing a Bitcoin ETF. Bitcoin has actually risen to $43,000 on Bittrex. Now, this might seem kind of strange because you heard that Bittrex was going to die. That much is true. And about dying exchange, I guess they just ran out of liquidity, but Bitcoin shot up to 43,000. But it's good that Bitcoin didn't actually drop to like 33,000 or something because of the lack of liquidity. In the face of a lack of liquidity, it could easily go way up or way down, and it chose to actually go way up. And of course, Bittrex, I'm not going to be crying tears over. I don't think anyone really uses it anymore. It used to be pretty big, but then they lost their license to the US market, and everything kind of like went down from there. So the price of the world's largest crypto, Bitcoin, ballooned to 43K on the embattled crypto exchange Bittrex's platform this week amid news that it was shutting down all trading on its platform. This last week, Bittrex Global, headquartered in Liechtenstein, yes, in Liechtenstein, announced its plans to shut down in December, by December 4th after facing regulatory hurdles in the United States. Obviously, that took away most of their income, and you can't function as a company without income. The U.S. arm shut down in March, and of course, they said it wasn't economically viable. It looks like it was not economically viable either for them to sustain their global operations without the United States regulations. But you know, there's been kind of like a scrounge and panic on Bittrex because they are going to shut down very, very soon. And it looks like that did make the liquidity completely crap out. And when the liquidity completely crapped out, they did actually manage to get Bitcoin up to 43,000, which is not a bad deal for Bitcoin at all. So that's pretty cool. And in other news, there has been no major fund exodus from Binance. Yes, they did go a little bit down in the hours after the settlement, obviously. They have to pay $4.3 billion to the DOJ and the CFTC, and also like $4 billion to like the OSC, the FSS, or the other organizations. So they ended up owing like $8 billion overall. But BNB has not actually gone down. It seems like they do have enough money. CZ being fined for $50 million, not a big deal for CZ. He has enough money, and he's not actually going to jail. And the thing is, DOJ did not say they violated anything in terms of like being a security or anything like that. So it does not bolster the SEC's chances against them. And in fact, the SEC stands to lose a lot from that lawsuit if they actually lose that lawsuit against Coinbase, which I think they will. So I think Binance is actually fine for right now. We'll see how they handle the fees, because they have about 160 days, I believe, to actually pay those fees. So they're going to start like selling like stuff very, very soon, but probably on a slow process. And let's not forget, Binance has a lot of USDT to pay those fines with. So like a lot of people were afraid of a mass exodus from Binance, but they kind of steadied the outflows about 12 hours afterwards. Yes, they lost a couple $100 in their reserves, but their overall reserves actually grew to like $65 billion. And withdrawals have been processed as regularly. So we know that Binance really isn't in any trouble, at least not immediately. because of the settlement. They have the money. They're allowing people to withdraw. They're not holding people's money hostage. And so I think they're gaining some trust in that area as well. I mean, Binance has like vast stores of cash because of their business model, and also because like they can do other things like derivatives, like leverage and stuff like that. They made a ton more money than any other American exchange, and I really, really do think that even though this also hurts them, it does not kill them. So hope you enjoy this. Hope you enjoy this format. I probably will do more of these hiking formats just to have like the surrounding be a little bit more exciting. Like and subscribe, hit that bell notifications button, and I will be back in the next video.